In taking on the building for our Natgen Investment Trust SG25, we looked at a number of factors going into that sort of investment. It's obviously an office investment in a capital city, which we haven't done before, and there's a reason why we do that now and not previously. You would have noticed that we've been staying away from office for a while, except in regional areas. And that really came down to the attributes that were happening at the time. Work from home was a big issue, which was causing capital city offices to reduce in value quite substantially during 2023 and 2024. So it's really about buying at the right time of the cycle, and in this case that time is now. We feel like we've bought this asset right at the bottom of the market, and that's exactly what we want to do. Really, it boils down to the old adages of property. You make your money when you buy something, and also, position, position, position. So that's what the SG25 asset on Southgate Avenue at Cannon Hill is all about. Then you look, of course, to the tenants that you've got, and your tenancies, we've got a range of timing of the tenancies, but it's really important to look at when those tenants came into the building. So a lot of them actually came into the building at a time when there was massive vacancy in the market. Work from home was happening, there was a lot of uncertainty, and thus they got really good deals. They got big rental incentives, and really ascendancy was with tenants at the time. Well, now we're in a very different time. We're in a time where supply is constrained, demand is increasing, and it's one of those times where the ascendancy has switched so that landlords have the upper hand. So when that's the case, rents go up, lease terms become more favourable to landlords. That pushes valuations up, and eventually you get to the point where new stock can come into the market, but that's not now. We've got quite a big headroom between what we're paying for assets and what you can build new ones for. So that gives us a latent valuation increase that we can have within the asset. So really, we're at that time where we actually like having leases coming up for renewal or resetting, because there's an opportunity to make back that gain that was lost in the last time the lease was reset. So in SG25, for example, we have Orica. They'll be leaving the building in the early to mid part of 2026, and we see the market rent being substantially above what they're paying at the moment. And that's really valuable to us, because we can then go back to the market in a constrained market and get the best possible return. So that lifts the income potential of the trust, and it provides a fill-up for the capital as well, because of course capital value of a commercial asset like this is really based on the annual income potential of it.